Ladies and gentlemen, the title is not clickbait. This is perhaps the most important video I've made in quite a while because it's giving you a very clear outlook on the cyclical structure for Bitcoin as well as the short-term and medium-term move. A very comprehensive, very extensive analysis looking into multiple time frames, an extent of which I have not really looked at them before, and a clarity of which I have not really achieved before. I can't really explain it in the introduction. You're going to have to watch the video. I'll try and keep it as short as possible, but guys, this is not one you want to miss. Trust me. Ladies and gentlemen, let's get into it. Ladies and gentlemen, before we dive into the charts today, let's check out the VIP group on Telegram. On Telegram, you'll find the VIP Information and Results group, which is a precursor to joining the VIP group. You can find that by going down to my description below and clicking on the link. This will show you the pricing details as well as the payment information, as well as what you actually get for joining the group. You obviously get payment, trading signals themselves with entry, targets, take profits, stop losses, whatever it may be you need to take a trade. We've got a PDF of all the historical trading results there with a 78.52% win rate, and you also get access to a VIP group chat where you can discuss the market and post charts to fellow members of the Wolves Crypto community. So go ahead and check that out. Without further ado, let's get into the charts. So we need to take this video incrementally today. We need to start by discussing the macro range, then we'll dive into the short-term movements, then we'll dive into the major movements. We have things to discuss in terms of news events. We have Federal Reserve interest rates to discuss. We also have the SPX, the stock market, whatever it may be, 18.6-year real estate cycle, the 4-year cycle. We're really getting into a lot of things today. I'll try and make it as quick as possible. I think I will be able to get it under 20 minutes. Let's see. Guys, let's get into it. Okay. So what has Bitcoin done? Just recapping here for a minute. We have seen an upwards trend from September 2023, September 11th specifically. We saw 4.5 months of upwards trend with higher highs and higher lows. We recently broke that upwards trend because we broke the higher low, broke below 40K. We are now in a downwards trend on Bitcoin, okay? And so with the downwards trend, this move right now, as long as it's below 49K, is nothing more. Well, we have no reason to believe really that it's anything more than a lower high, sorry. So we have a lower low here. This could be a lower high, and then we'll go down and form another lower low. This is, at the moment, we have no reason to believe it's anything but a downwards trend with a regular lower high right here. We have no reason to believe that it's anything else than a downwards trend unless we break a weekly candle close above 43.8K, because breaking a weekly candle close above 43.8K, which is this line right here, will be a break above weekly chart resistance and a break back into an established weekly close upwards trend, which would have positive effects for Bitcoin. So essentially what I'm just saying, I'll wrap it up very quickly here with the recap, we'll get into new content, is that unless we get a weekly candle close above 43.8K, right, which is possible, but less likely, all right? That's how I'm doing it right now. It's possible, it's definitely on the table, but it's not the likely scenario. Unless we get a weekly candle close above 43.8K, Bitcoin is still in a downwards trend and Bitcoin's lower targets are still valid. What are the lower targets? The lower targets are 35K, 32K, and 28K. We don't have to go all the way down to 28K just because they're targets. It doesn't mean they need to be reached, but those are the targets that are on the screen there. So 35K, 32K, 28K. Until we get a weekly candle close above 43.8K, those targets are valid. And by the way, getting a weekly candle close above 43.8K will not be the be-all, end-all for making the charts bullish again. It would just make the charts neutral and waiting on standby for further evidence. So that's a recap of the situation for Bitcoin, right? Now, getting into more shorter term, where this is what's really relevant to the video topic and how we can kind of analyze the short term and reflect it into the longer term here. Very important part of the video here. We went upwards, we bounced from 38.5K, predicted the rejection from 49K within 12 hours of it occurring. We went downwards to our first target at 38.5, bounced very strongly from that first target. We've gone upwards here, we've formed a bullish pennant formation. Okay, let's go into the hourly chart and take a look at this structure right here. The bullish pennant formation was very valid, as you can see, until yesterday. We had a multiple retests of support. Support line is still valid. We had multiple retests for resistance. Resistance line was valid until yesterday. And you can see we actually broke to the upside in that bullish pennant formation. And for 1 hour, Bitcoin was actually looking quite decent because we had the opportunity upon that breakout to attack 43.8K and potentially look to get a weekly candle close above the critical level. But unfortunately, the breakout failed. We saw a massive fake out there. We went right back down. Now, why did that occur? It did not occur because the chart was invalid. The bullish pennant was valid. It occurred because of the stock market. And more specifically, it occurred because the Federal Reserve Chairman Jerome Powell said something. Jerome Powell said that we want to be seeing more evidence that inflation is moving substantially down to 2%. Our confidence is rising. We just want some more evidence before we take that very important step of beginning to cut the interest rates. Upon him saying that, which was yesterday around that time, right, we saw the likelihood of an interest rate decrease on the next federal FOMC meeting kind of go downwards massively, right? We saw the probability of seeing no change to interest rates increase massively. It's now at 85%. So the market now is not expecting rates to decrease in March. It previously was. This has led to a shift in market sentiment. And we saw the S&P 500 open with a pretty decent red candle because of that, right? Not a massive red candle, but a decent red candle, right? From the wick top, we saw downwards to around 1%, which is quite significant in the S&P. On the candle itself, it went downwards a maximum of around 0.7%, which isn't that minuscule. And if we go to the hourly chart, we can see it very much was due to that news, because on the open itself, that's when we saw the entirety of the move, right? So something shifted overnight, and on the open itself, we went downwards. The likelihood, the overwhelming likelihood, is that what shifted was the market's expectation to interest rate cuts. Now, what does this mean? It means that the market was expecting interest rates to be cut, right? Or at least sooner than they're expected to be cut now. Federal Reserve Jerome Powell said something that shifted market sentiment. Now people are not expecting interest rates to be cut at the next meeting. That was not priced in. So this drop, and the drop that might continue from this, is pricing that in. Now, what does this mean? We have to dive deeper into this, because it's not just a surface level thing. It means that the market, fundamentally, is bullish about rate cuts. They want to be seeing rate cuts. Rate cuts are bullish for the market. That is what we're getting from what's happened in the last 24 hours. Because if rate cuts were going to drag the market down, we would be seeing a pump after rate cuts were delayed, not a drop. So the fact that we've seen a drop is actually bullish. It means that people are expecting, or the market in general is expecting, rate cuts not to have a bearish effect on the market. Meaning that when we do see rate cuts, which will be happening this year, those will likely be bullish for the S&P 500. Now, looking into the macro trend here, and I'm going to take this all back to Bitcoin in a moment. I completely understand it might be getting sidetracked. I promise you this is not sidetracking. We have a chart right here. The blue line represents the S&P 500. The orange line represents interest rates historically. People are kind of speculating, the bears are kind of speculating that Bitcoin is going to get dragged down by the S&P 500. The S&P 500 is going to drop because of rate cuts. Now, we saw that occurring in 2008. And we saw that occurring in 2001. That's two occasions. But we did not see that occurring in the 1989. We did not see that occurring in the mid-80s. We did not see that occurring in 1982. We did not see that occurring in the 70s financial crisis. The fact of the matter is, we only have two valid data points to suggest that interest rates dropping leads to the financial markets going down. And you might be thinking, well, what about COVID? Well, we didn't drop because interest rates decreased in COVID. Interest rates decreased because we dropped. Okay, so we only have two data points. As we know, mathematically, two data points is not a trend. Therefore, we do not have any trends to suggest that interest rates dropping drags down financial markets. We also, actually, it's quite the opposite historically, to be quite honest with you. And furthermore, it's very important that people remember that the Federal Reserve has done something that's never been done before in the recent 3 years on Bitcoin. We saw interest rates increase during a downwards trend on Bitcoin. That is rarely ever done. In fact, I don't think it's been done before massively, right? So we've seen the Fed do something in reaction to a market environment that they've never done before, okay? Which obviously means that we have different circumstances this time, so we can't be sure about what's going to happen next. And we don't even have a trend that suggests interest rate cuts will drag the market down. And now we have this short-term evidence coming out. Yes, it's preliminary evidence. Yes, it's not strong evidence, but it is evidence coming out that interest rate cuts will actually be bullish for the market. All of this is actually indicating that Bitcoin and traditional markets are going to be seeing a very nice, healthy, or I wouldn't call it healthy, let's just say euphoric, next couple of years, okay? Now, this lines up perfectly with what we're expecting by the 18.6-year economic cycle. Okay, you can see on the screen right here, we have an 18-year period starting in 2011. This time, this goes back all the way to the 1920s, by the way. It's happened 5 separate times, so it's a very well-established trend. Going back to 2011, we started the 18.6-year cycle. We went upwards until 2020. We saw the first drop of the cycle. We are here, as you can see by the circle, and we should be seeing a parabolic run in 2025 and topping around 2026, which is what we expect, by the way, from the cyclical theory on Bitcoin, bull market after the halving. And then after 2026, we'll see a peak and we'll drop downwards into a major recession around 2027, 2028, 2029, and perhaps in 30 in the 2030s, we can start recovering again and start a new cycle. That is what we're expecting as per the 18.6-year economic cycle. And that is what's supported by the charts right now. Moving forward, the same thing. Bitcoin 4-year cycle, it says exactly the same thing fundamentally. It says we'll see a bull market in after the halving 2024 and 2025, which is what's expected by the 18.6-year economic cycle, and then we'll drop downwards and we'll see a bear market in 2026 to 2030. Not to 2030, sorry, from 2026 essentially to 2028, right? So that lines up quite well with what we're expecting from the 18.6-year economic cycle. And then we also have, which I don't really have a chart for, but I've spoken about so many times in the past, the presidential election, okay? And we have something called election cycles. Now, generally speaking, the S&P 500, stock markets in general, outperform regular years by around 2 to 3x on election years. So election years are very bullish for financial markets. It is an election year this year. The election will be taking place, I believe, in November this year, maybe September, I could be wrong, in the USA. And so that means that as per the 18.6-year economic cycle, as per the 4-year cycle, as per the election cycle, everything is kind of pointing to a very bullish 2024 and 2025, and then everything is also pointing to a quite bearish 2026 onwards. Okay, so the cycle is being supported quite massively here. And with Jerome Powell coming out and saying that the rates are not going to be decreasing as soon as everyone expected, and the market dropping because of that, that kind of cuts down the bear case, because the bear case fundamentally is that rate cuts will decrease the market. Okay, rate cuts will lead to drops in the market on S&P and Bitcoin, right? And that is now being, it's now being hindered. That theory already wasn't very strong because it wasn't actually a trend. It was just speculation. But now the short-term evidence is actually going against that. And now we're seeing more evidence stacking on top, piling and piling upwards, that the 18.6-year economic cycle, 4-year cycle, and the election cycle will be happening as planned, and we will be seeing that bull market begin this year, probably around May, because we're looking at when interest rates will start decreasing. The likelihood is that interest rates will start decreasing in May. Okay, so we're looking at the halving in April. May, interest rates will start decreasing. The election at the end of the year. All of those things are bullish catalysts. So I'm seeing quite a bullish year ahead for Bitcoin, and also in 2025. And that's kind of what I'm going to get into. So, we're seeing for the first time kind of that major bear case, the interest rates cutting, dragging down the markets, being cut down to an extent. Great stuff here. But this does not mean that Bitcoin is out of the woods yet. Okay, Bitcoin is very much not looking good on a medium-term perspective. We have to remember that May is a while away. May is 3 months away. Right, so what are we going to do in the next 3 months? Before we get into that, let's check out the Bitget and Bingx exchange for a minute here. Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have 2 exchanges for you guys, 2 options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got Bingx. That's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right? With a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on the good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video. Welcome back, guys. As we've discussed in multiple videos in the past, look, go to my YouTube channel, watch any of them. Watch one yesterday, watch one the day before. Bitcoin is not looking great in this specific part of the cycle, even though we have these massive bullish catalysts coming towards the middle and end of this year. I do expect the middle and end of this year to start a bull market. I do expect that bull market to top out in late 2025. I'm very bullish on the macro, but in terms of the short and medium term, I do observe that Bitcoin is facing some headwinds here. It's facing some turbulence, and it could go downwards. Look, as I said, for specifics on that, you can go ahead and watch my previous videos. But specifically what we've seen, as I said, is a failed breakout of this bullish pennant formation. I think I discussed that at the start of this video, and hence a failed attempt to come and try retest 43.8K. As we discussed at the start, we need to break 43.8K to see a trend reversal here. Right now, the trend is bearish. We do have a bearish trend, and with a bearish trend, we need to expect lower targets. Look, The reality on Bitcoin is, and I think a lot of people might forget this, is that we have not really seen any significant bearish price action properly since March 2023. I don't think people are used to bearish price action. Like, yeah, we saw corrections here, but they all took us down to equal levels of support or even higher lows, right? They weren't actually, it wasn't blood. It wasn't pain. The last time we saw pain was March 2023, almost a year ago now. People are not used to pain in the market. They don't think it exists anymore. And I can tell you right now that getting into that mindset is generally the incorrect thing to do. Yes, there is a chance that the ETF has shifted the market structure of Bitcoin. There is a chance that ETF buying could just pump Bitcoin irrationally. There are chances of these things. There's a chance that there's not enough bearish narratives for people to sell. There's a chance people are not happy to sell before the halving, right? But that's not measurable. The measurable data is this. Bitcoin is in a downwards trend. When Bitcoin is in a downwards trend, you need to consider the lower targets. Bitcoin has done this before. Bitcoin is mirroring 2019. In 2019, we saw a significant correction before the halving. And so we have no reason to believe we won't be seeing it again. I think that as for the next 2 or 3 months, there is a pretty high likelihood that Bitcoin sees significant corrections, to a 38.5K again, if not lower, 35, 32, things like that, and consolidation for a couple of months. That would be the most healthy thing the market could see. It's not guaranteed because we have these speculative data like, ETFs and stuff like that, that could have changed the Bitcoin structure. But all of the measurable data, I'll tell you right now, and every analyst will tell you this if they're honest and they know what they're talking about. All of the measurable data on a medium-term level and on a historical level points to Bitcoin going downwards more, right, over the next 2 to 3 months and then seeing the bull market. That's what the data suggests. So do with that what you will. I'm personally not doing much of it, I'll tell you right now, because obviously there's tax incentives of holding your bags for more than a year. Well, at least in Australia there is. So I'm not willing to sell. I have not sold. I'm not willing to sell. And I'm certainly not sitting in massive short positions either. But I am expecting headwind to a certain extent because I'm a cyclical trader. I believe in the cycle and I believe the cycle works, right? So I am expecting headwinds. We've already seen some. We've seen a 21% correction. The question is, will it go down more? Right now, the data suggests it will. Until we break 43.8K, that is the consensus of the data right now. So although we are very bullish on the macro, we're very bullish when it comes to this year as a whole basis, we'll definitely start, it's very, very likely, right? It would be weird if we didn't. We will definitely end this year higher than what we started this year, and we'll probably end this year at all-time highs on Bitcoin. But as for the next month or two, or maybe even 2.5, yeah, look, there's headwinds and there's definitely threats for Bitcoin. So guys, with that said, thank you guys for watching. I hope you enjoyed the video. Go ahead and check out the Crypto Academy. The Crypto Academy will teach you how to trade. The Become a Trader 10-unit course teaches you everything you need to know about trading, everything you need to know about market analysis, everything you need to know about fundamentals of financial markets, how they work, what is Bitcoin, etc. We're going through market patterns, indicators, candlestick patterns, market psychology, how to find trades, the whole 9 yards. Check out the website and throw us an email, and email addresses on the website as well. Thanks for watching, guys. I hope you enjoyed, and I'll catch you in my next video.